So, good morning, dear traders. Winston Gold here, aka Mr. Mayor Forex Trading. Welcome to this lovely trade. I know trading day, it's a Monday. I know it's a bit early. I usually start trading at 8 o'clock in the mornings, but there was some development in the market and I want to talk about it. So, I'm just going to skim over it quickly, and then at 8 o'clock I'll start my analysis and my live analysis. And for those of you who just joined, thank you so very much. Please like, share and subscribe. I trade live every morning, Monday to Friday, so you can see my gains and losses. There's a lot of the traders. The reason I trade live is because there's a lot of these so-called traders that post videos of their winning trades, but you never see them losing. And they come with the false promises of making money, millions of dollars, and overnight success stories. And you see them driving the Lamborghinis and the Porsches and live in the big houses. They live in those big houses not because they are traders, but because they are scamming you, the potential new trader. Because now you have to buy his product, join his Discord, and of course you have to listen to him on his Telegram page. Please, ladies and gents, I have got this YouTube channel. It's free to join. I trade every morning live at 8 o'clock South African time, and you feel free to join me and see how I trade. And if you can learn something from it, I am all the happy. I don't have a Discord. I don't have a Telegram page. I've got nothing, none of that. I'm not trying to sell you anything. I'm not going to sell you anything. I trade live. If you want to join, if you want to see how I do it, feel free. It's free knowledge, free to use, free for everyone, and that's how I'm keeping it real. So if you are looking for a trader to follow or mentorship, please, if I can give you some advice, follow a trader that trades live every day, Monday to Friday. Follow a trader that trades live. These people that want to sell you these products and show you videos of the winning trades, you will never see those losers, those scammers trade live. So this is a warning and just a good advice for all new potential traders out there. Don't make the same mistake I did. Don't make the same mistake I did when I started trading years ago, to try and follow these people that promise you the sun, moon and stars, and you only get disappointed. From the get-go, join someone that is not afraid to trade live on YouTube for everyone to see. So you see their failures and you see their successes. And then you can decide who you want to join. That's why I have got this YouTube channel. It's pretty new. I've been trading for a couple of years now. And I never, wanted to start a YouTube channel. But because I saw what traders, potentially new traders, are going through with all these new traders popping up, putting up videos of, ooh, you can make this much money and you can make this much money, but they never trade live. I decided I'm going to start a YouTube channel and try and go against those people, because they are scamming you. They are scamming you. They are ripping you for your money. And please, there's a handful of traders that I know online that actually trades live. Trader Nick is one of the people that I check every now and then. He trades live, a good trader to be on. But the rest, please, do not fall for their bullshit. Do not fall for their cock. Don't ever fall for their shit. Alright, so I want to jump to the charts quickly here. Before I start trading, I trade live at 8 o'clock, but it's a bit early on, but it's fine. I want to have a look. I want you all to have a look. I'm just going to put the video off so you don't see my ugly face, because I'm going to explain stuff now. So I just had to have my video on to explain quickly why I have got my YouTube channel and why I'm trading live. Now, as you guys can see, this is a demo account, as I am testing out a new trading strategy as well. And we'll see how it goes. Now, for those of you who have seen my trading style and see the way I trade, I jumped into this Euro USD a bit prematurely, but it's fine. It's a $41 in the red. Now, the trades I take on this demo account, I do on my real account as well, except when I try out that new strategy that I use, a Fibonacci and so forth. I don't do that yet because I'm busy testing it real life. If you want to test a strategy, the best way to test your strategy is to do it on a demo account and not on your real account. So that's why I trade here. Alright, so let's have a look. And plus, I don't have to show you my real account, because here's the results on the demo account, and I trade live every morning anyway. So what I do here is what I do on my real account. Alright, so let's have a look. The Euro USD, the Euro Yen, I'm a little bit on a losing position on this one. Because I jumped the gun here, I went a bit above how my strategy works is if you see a breakthrough and you see a second run, once you see a breakthrough, now this is the recent swing high over here. If you guys can see that, that is actually no, that one didn't break. This is the recent swing high over here where this red line is. Let me just mark it out quickly. So the way I trade, I would have waited for price action to break this like I did there, come back for a retest and do a second run where it breaks the high of this high of the candle that broke the original high, which is over there. And I wait always for a second run, so then you don't get caught up in this mess over there where it breaks through, does a fake out and goes against your trade. I jumped into it earlier because I was looking at the market, and I know that the euro has shown some good numbers, but also, you know, you don't have to discount the yen. The Japanese yen is also quite busy beating back the market, so that's what happened there. Expectations, but because I trade with small lots and I manage my account very well, I never want to trade or risk more than 0.5% of my account. You don't want to risk more than 0.5%. 1% of your account if you really must, but don't risk more than 0.5% of your overall account when you do trade. And trade small lots so you can put wide stops, because that's where majority of the traders lose their money, is because they've got these tight stop losses right underneath and they get stomped out, and then when you look again, the market goes in your favor, but you've been stomped out because you are trading too big a lot sizes, too big a leverage, and you don't leave yourself room to actually have a wide stop, and that's how you lose money in trading. Let me tell you that you can lose money quickly with tight stops. That's the first thing you need to stop when you do trade, is having big lot sizes and tight stops. Small lots, small volumes, just small. Slow and steady wins the race. All right, so at the moment, $44 in the negative here. Let's go to the next one that I'm in as well, is the euro USD. Now we do see, if you look at the DXY, it is in a bit of a messy situation. So yep, that's a true story. Here also, I didn't stick to my way of trading. I'll show you now my way of trading, how it works with the gold. Here I saw a break, and because I watch the news and on Forex Factory, and I see what the market is doing, I more or less have an idea of where price action is going to go. So I jumped into this trade also prematurely. Once I saw a break of this previous high over there, came back for a retest, I jumped into it. So I am in the profit over there. Now, next on the line is the pound USD. So the pound USD also, yeah, is a perfect example of my trading style, of what I do. So here, price action came up. There's the previous high. You can see that because it's a previous high because it broke the previous low. So that means that is the previous high, and that there is the previous low. So price came, didn't break the low, so that's still my previous high, that is still my high, and that is still my low. Price broke up, but this is not your previous high. This is not your high over here. Your previous high is over there, because this one didn't break the previous low. So this is not your previous high, and this is not your previous low. Remember that. The only way to confirm a high or a low is if you see it broke the previous structure. So there is my previous high. What I waited for was for price to break through, come back for a retest, did a second run, and there you see that second run coming up there, and it didn't quite broke through, but I saw that we've got some buying pressure, so I put a pre-order right on that previous high. I put my pre-buy order, was actually a bit on the lower side. Actually, I jumped in there. I jumped the gun a little bit on that one, but because I saw prices going to the upside, that's why I jumped the gun. Sometimes I do, but with my trading style that I use, because I've got small lots, I can, you know, jump into the market a bit earlier, because I see what the market is doing by the numbers coming out from, you know, the CPIs and so forth. Once you start trading for a long while, you can start more or less figure out what the market is going to do and how the market is going to react to the numbers, the core PPI and the core CPI and all those things. So that's why I jumped in a little bit on the earlier side onto this one. But there we go, got into the market, jumped in here, of course, right over there, and the pound USD is at $128 now. Now the gold, Friday, let me go to the gold. 168, then I'm up already, but remember, you are not $168 in the green. You are wherever your stop loss is. So I jumped into the gold here. Reason being, it broke through this little previous structure, and I do see that the dollar was busy falling. This happened all on Friday afternoon. Now usually Friday, nothing happens in the markets. So just by curiosity, Friday I went and I just had a look quickly, just the markets, just every now and then I just glance over the markets and I saw gold broke through. So this actually put me in a very peculiar position, because if you see where the previous high was, there's a previous high and there's a previous low. Market is in a very ranging over here. So when I saw that markets broke through and I saw the numbers for the US coming out, I decided to wait for a break candle right over there. There's a break candle that broke that previous structure over there, break, retest, and went up again and broke that high. I decided to jump into the market right there. It was a bit of a premature entry, but it's still a valid entry. So what I did was jumped into the gold, and it absolutely skyrocketed. So it created a new high and a new low right over there. So I moved my stop loss from below all this nonsense up to there. So with the gold, I am $50 up. $50 up. Regardless of what happens there, I'm $50 up. So there is the new structure, the new low, but it's not a confirmed low yet. Once price breaks that previous high right over there, let me just, where's my thing? There it is. All right, so once price action breaks that high over there, then that is confirmed to be my low. I just want to swap these two around so you guys can see. All right, so that is my previous high. The reason it's a high is because it broke the previous high. So that is the new high over there. Now I'm looking for price action here to break that high. Then that confirms the low over here. So for now, this is not the previous low. This is still the previous low right over there, because price action broke this previous high, confirming the previous low. So this is a new high, and it's busy forming the new low. It will only be confirmed once price breaks this. Then this will be my low, my new low. If that happens, I'll move my stop right over to there, just below it, and that will put me $126 in profit on the gold. But for now, it's still there. So I'm $50 in so far on the gold. And this was just by chance that I just looked at the gold and I'm like, hey, it broke through. Hey, yay, there we go. Lovely. All right, so as you can see with the US as well, the DXY, if you look at the DXY, the US dollar, the dollar index is a bit on the downside, and it is approaching a very stable support at the moment. But with the numbers, the CPI and the PPM and all the numbers that came out with gold, the jobless claims and the jobless numbers, it is very conflicting. Now, conflicting information causes instability within the market, within that currency, which causes fear. And fear, unfortunately, has got a very negative effect on the US. As you can see with the US, this sell-off on the Japanese happened because majority of people lend money from the Japanese bank, from the Japanese yen, because lower interest rates and lower. So lending goes on here. Heavy lending goes on here, especially if you can see with the US numbers going up and interest rates going up and numbers not adding up. People tend to lend money to lend yen, because yen, lower interest rates. So at this moment, at this point of time, I want to wait for, this is a little fake out over here. I want to wait because I do see that there is a solid support over here on the US yen. Now the same with the euro yen as well. You can see this selling off going on here because the yen is gaining momentum. The Japanese yen is gaining momentum. So I want to see where this one ends up. I've got my stop way below there, so that is $317 stop. So way below, because the euro is also doing quite good as well. It's also on a strong trend, so I can see that the euro is trying to push back, but with all this money lending going on the euro, on the yen, people buying yen makes the yen stronger. But all that money eventually is going to get paid back, so then it will rocket this everything against the yen back up to the top again. All right, so that's just this. It's just money borrowing going on here with the yen. People like to borrow yen because yen, like I say, got a very low interest rate. That's why people like to borrow yen. That's all that is. But I would think that our borrowing is over, and I'm just waiting for price to bounce back up to the upside, which I think it will. But these are technical terms that I'm just using now because of market analyst and analyzing the markets and the numbers and so forth. But coming from a chart standpoint, when I would look for a trade on this one, I should have just waited for my. If I waited to trade my way, I wouldn't have been in this mess in the first place, because I wait for a push through the recent swing high, which is that one over there. Actually, it's this one over here if I have to look at it. And it's a high and that is low. So actually this is the recent swing high over there. Let me just mark it out. That is actually the recent swing high, because that high over there broke the low. So this is actually your recent swing high. Now looking at this, I would wait for a break, retest, second run. Okay, so I actually would have been in this market basically at the same place. On the very tippity top, I would have been in this market anyways. Now, the way I trade doesn't always work out, because markets is, the markets. Nothing is for certain in the markets. But if you work with small lots and you limit yourself to only 0.5% of your account when you do your stop losses, you've got nothing to worry about. So I've got a wide stop over there, wide stop down there, plus I've got a very solid support over here. So price might range back into this and start ranging in this momentum here until the euro starts gaining, or until the Japanese yen starts losing traction. One of the two, either or, but one of them has to happen. All right, so excuse me, I'm also not feeling lekker. Now, what I have on my euro USD, I just want to explain it quickly from a standpoint of why I jumped into this trade. Now, the reason being is there was a solid support here. If you look at the daily time frame, remember I trade on the 6-hour time frame. I trade your forex pairs, I trade on 6 hours, and the gold I trade on the 30-minute time frame. It just works out. I've been through all the time frames, and this is what works for me. So if you look at the daily, I just want to go to the daily chart of this, so I can explain why I jumped into this trade, why I am in a buy on the euro USD time frame. Sometimes you get lost when you sitting too long at the 6-hour time frame. You get lost. You really get tunnel vision. So sometimes it's good just to go into the daily time frame, reverse out, and see what the whole picture looks like. So when I reversed out, because I was on a 6-hour time frame, and this pair was doing something abnormal, something I didn't expect it or didn't think it would do. I thought it would break down to the downside, but it actually decided to break up to the upside. So I was wondering, like, why the hell would it do that? Because I was too focused on the 6-hour time frame, on the short picture. I had to reverse out a little bit. I went to the daily time frame like I'm doing now, and I just had a look at the whole picture, and I just drew some lines, and I saw, oh, here's a nice little wedgie over here, a nice little pattern. A lot of people call it a flag pattern, wedge pattern, ascending, descending wedge, but this is just a nice little pattern over here. And I saw, okay, it broke through there. You see, that one broke through. That is why we are sitting where we are sitting. Now, I do know that I have got a solid resistance over here, but with this break of structure over here, we might see a push further to the upside on the euro USD, especially because the euro is doing so good and the US dollar not so good at all. So let's go back down to the 6-hour time frame. That's where I am. Let's go there. Alright, so that's the reason why I'm in a buying position. Number one, the DXY is on a downfall, the dollar index, and plus it broke the structure. So it broke it, came back for a retest on this line over here, and went to a push to the upside. That's why I decided, and it broke the previous high over there, and I just decided to jump into the trade and just see how it goes. Alright, and that's my only reason. Don't have a major explanation, but if you trade for a long time, you start picking up on these things. You start picking up. Now the reason also this trade worked out so nicely for me, and I jumped in quite early on this one, is because I look for gaps in the market as well. Like that little gap there, you guys can see that there's a little piece there where there's no candle whatsoever. These gaps to me is a very good indication, or good indication of buyers or sellers jumping in. It was a red candle, it would have been sellers, but this is an upward movement, so buyers. So when the price was there, I already made this block over here. I already made this block because I know that this is a solid support. And look at what happened. As price came back into that little zone over there, I just saw some buying coming into the market. As price actually came closer to it, I see buying pressure coming, because buyers don't want, the bulls don't want price to go below this, because a lot of the institutional traders, when you see that, you know, institutional traders, hedge funds, and you know, the big boys jumped in there. Whenever you see something like that, you know it's big boys. They bought some, and they're not going to allow price to go below this, and they'll do everything they can to prevent price from going. And that's the reason why I jumped in early. I jumped in there already. I think, oh no, I jumped in somewhere around here. Once I saw the nice, you know, I saw the stop happening, I just jumped in. And it worked out in my favor because it's right over there. Let me just quickly check how much I'm up already on this one. How much points? I just want to check. 2,631 points already up. Yeah, that's a 2% gain on my account. You see there on the side, it's a 2% gain. Just that little jump over there. So now I'm waiting for price to come back, do a new low, and then break that low, or just hit the take profit, because I do have a take profit over there, which is 140, so it might hit my take profit, and that will be actually quite a, let's see how much gain that will be on my account. Let me just get there quickly. I just want to see from there to there. That will be a nice 2.2% gain on my account, which is phenomenal, which is good. Frankly, you want to work with a 1% gain per month on your account. Realistically, 1%, 2%, maybe up to 5% a month gain on your account. That's what you want to work with. These people that say you can make 10% or 50% of your account a month, my goodness, I want to see that happening, because that is definitely, you know, dreaming, big time dreaming. You think you can make 10% on your account every month? That's daydreaming. Your aim should be a 1% gain every month. Remember, like I said in the beginning of the video, slow and steady wins the race. This is systematic wealth. Trading is systematic wealth. That's all it is. Just slow and steady wins the race. Alright, so with all that being said, let's see what else have I got there. And then that's 296. That's a bit of a, yeah, you see, I shouldn't have jumped in so early, but yeah, shit happens, you know. Sometimes you can't just have all winning trades. That doesn't work. I just want to make sure all my stops at the best places. Alright, yeah, that's the best place there. Let's go to the Euro USD. Okay, there's, you see it's starting to break through. Once it breaks through, this will be confirmed to be a nice low here as well. I did jump the gun a bit on my low. This is actually the previous low over there. But it's breaking through, so I'm going to wait for that, and then I'll move my stop loss up, and I'll do a trailing stop. This one has broken through. I'm waiting for a retest, and I'm waiting for a new low to form here somewhere. We'll see how that goes. It should probably be on this line over here, because it broke through this whole structure over here without even stopping. And this is a good structure, so which means there are good momentum in the market. But already on my pound USD, it's $44 in the bag. So the Euro USD, I can't move my stop loss up yet, so that's a $35 loss if it doesn't go in my favor. The gold, I'm already That's $50 in the bag. Once gold breaks through that high over there, I'll move it up, and then it's I think $140. What did I say? $140, I think. Yeah, about $120 gain. So yeah, for now this is a $50 gain. So up already on that one. This one I'm just gonna wait. The US yen, I'm gonna wait for this one to decide to pull up to the upside. Oh, this is a nice fake out. Yo, a lot of people got caught into that one. Me included. Damn. But anyways, not gonna take up too much of your time for today. It was just a quick early update on this lovely Monday. I just want to have a look and tell you guys that Thursday we're gonna have some troubles in this market like you cannot believe. So news-wise, I'm on Forex Factory. You guys, those of you who start trading, this is your best friend. Use Forex Factory. It is free. You just go into Google, type in Forex Factory, and then you just save it to your desktop so that you have got a shortcut to your desktop. You're going to use this every day. Now, news, it's what moves the markets. All right. So, whenever you see these red envelopes, that means these got the potential to move the markets. The orange envelopes are the ones that, you know, got some slight potential, but the yellow ones are like, nah, just normal. Now, the news for today, not too bad. For tomorrow, not too bad. Wednesday, not too bad. Our problem comes in. Okay, Wednesday is the meeting minutes that comes out of the FOMC. Thursday, here is where the shit's gonna hit the fan on Thursday. So first of all, you got the euro. Now, the flash manufacturing PMI. This is for the French, of course. The flash services PMI manufacturing, the German PMI. It's a lot of big news for the euro coming out, and then for the pound, it is the flash manufacturing PMI. I'll explain now what it is for you guys. Plus, we have the US dollar coming out with unemployment claims. It's their PMI. Oh, it is going to be a market mover Thursday. Be sure that you're on the sidelines. I'm going to tighten up my stops wherever I can, because Thursday the markets are going to be all over the show. It's going to be an absolute bloodbath on Thursday. That I can tell you from my experience. Thursday is going to be great. It's going to be a fight. It's going to be a fight to the end. We'll see who survives. Anyways, trading is so nice. You know, markets and stocks, and it's so nice. And for that, also, if you guys have got anything you want me to have a look at, any advice you want, or you know, I can just give you my thoughts on things. Remember, I can't trade for you, and what I say is not final. You have to make your own decisions. I can't make decisions for you. Trading is a risk that you take on your own. I can't take that risk for you. So I can only show you guys what I do, and if you find value in it, by all means. But I'm not telling you what to do. I'm just giving my advice, and that's that. Oh. South African winters. Oh God, I'm sitting here, it's hot, but yeah, cold. Anyways, let's look at Thursday. I can't wait for this to happen. It's going to be a market moving day. But that's for Thursday, and for now, for today, I'm just going to enjoy the ride. I'm going to hope for this euro USD to push on to the upside, especially because the dollar is doing worse. I hope this one makes a turn quickly. I'll start pushing. I do see some fighting coming in, but if you look at the volume on the market, there's a lot more selling volume, and you can see. So if you look at I've got this vertical volume. That's all I work with. I don't work with any other things. I don't have any other stuff. I don't have stuff on my, when I trade. I don't have any shit. That's the only thing I got. Volume, and then I mark out my support and resistance, and then I just go with my trading style that I have. So if you look at the volume, there's a big volume on the selling side over here. So which means that this is a very good sell-off position if you want to use that as a reference point for your next resistance line. All right. For those of you who are wondering, this is just a vertical volume. That's all I have. And when you do see these spikes, you can be sure to know that there's a lot of sellers that jump in there. That's what that tells me. It's just there's a lot of selling going on. There's a lot of volume in the market. Whenever you do, and it refreshes every minute. So whenever you do see volume spikes like that, either to the upside or the downside, you know that it's either a resistance or a support, all depending on what direction, you know, the candles are taking, the market is taking there. So I do see low volumes, but I would like to see some spikes coming into the market now, especially if I do see some buyers jumping in. That's what I want to see, so I know where my next support is and where my next resistance is. From my side, please, ladies and gents, like, share, subscribe, and if you have anything you want me to have a look at, please feel free. And just remember, I'm not here to sell you anything. I'm just here to trade, and I trade live every morning. And as you guys can see, I'm not bullshitting or horse shitting or whatever you want to call it. This is live trading. So today is Monday, the 19th of August 2024. The time now, South African time, of course, is just 18 minutes past 8. And you know, I'm one of the few traders that actually trade live, so you know there's no horse shit, no bullshit. My losing trades are on here, my winning trades are on here, my way of trading is on here, so I don't have anything to prove for you guys. I trade live. So if I mess up, I mess up. If I'm a shit trader, I'm a shit trader on live. YouTube for everyone to share the videos and mock my name, but so far I'm doing good gains. Anyways, from my side, have a good one. Please like, share, subscribe, and I'll see you guys again later. Cheers.